In my book, I look at a number of bank-specific explanations for the financial crisis. And I think the problem is none of them really works. So take bonuses, for instance. Yes, some of the banks that ran into trouble had big bonuses and a big bonus culture, but then others simply didn't. Think of the German Landesbanken, where bonuses weren't really part of the problem at all. Or sometimes people talk about lax regulation as though that was the root cause of the crisis. Some cases, I grant you, that there was a big problem about regulation. You could argue, for instance, that the Icelandic banks weren't regulated at all. But for every example, you find a counterexample. And so if you think about Fannie Mae and Freddie Mac in the US, for instance, it's hard to find any more regulated institution. 230 people were doing nothing else but regulating just those two banks. So I think none of those explanations really work in isolation. What I propose as an alternative is what I call the 7 deadly sins of imprudent banking. What they are basically 7 types of behavior for banks that make handsome profits for a number of years, in good times as it were, but then eventually quite a large loss. One example would be balance sheet mismatches. It's an obvious case, sort of borrowing short and lending long. But as I said, there are others. So there are 7 different types of behavior groups that you find in basically every financial crisis that you look at, past and present. And what that means is that bankers had basically 7 ropes to hang themselves. There isn't just one cause of the problem. Now, what I try to do is not only to describe what those 7 behavior patterns are and what role they play in the different financial crises, but I also try to address one question that I find very puzzling. Namely, if we all know that these 7 types of behaviors are very problematic, why hasn't anyone stopped banks doing them? In each of the crises, shareholders lose their shirt, regulators get a lot of egg on their face, and bankers lose their jobs. So the obvious question is, why has no one done anything to eradicate those 7 behavior patterns? And I think that's quite an important question when we think about sort of post-credit crunch banking, what sort of banks we want and what sort of bank regulation we want.